Monday, July 21st, I got a special episode for you because we will talk about my favorite things about Seeking Alpha. And if you're pissed off about me talking about Seeking Alpha, just tune out now because I'm going to give you the top second half stock, which is up amazing 65% just in the 1 month since it was picked. I am also going to start releasing the Epstein List. Just a red alert. The Epstein List is going to be released on this podcast, and I will give you reasons why. We got an addition to the S&P on Friday, and it's up 13, 14, 15%. And FYI, it wasn't Robinhood. I'll give you an overview of Perplexity. We will look at some leaders to trade now, some growth stocks, some earnings, including a stock that is up, I think it was up 10% so far, including a 7% dividend yield. It just reported this morning, and we'll go over the week, plus Bitcoin and crypto. There is a new hot take. And the scans on 4-hour algorithm, there were huge scans. We'll go over some of them on this podcast. You can get them all in the newsletter. Let me start out by saying the TrendSpider sale has been extended. Okay? TrendSpider sale has been extended. The winner of the 1 year of advanced tier. Okay, they didn't respond on Friday. So I'll be figuring out this week how to give it away again. Again, it's a year of this. This is over a $2,000 prize. So why you didn't respond to my email, I have no freaking idea. But FYI, it's too late. You had till Friday. I think your email address started with an S, and it was at yahoo.com. So if your email starts with a yes, check your spam folder, but it's too freaking late right now. This is crazy. And I will start this with saying, if you're interested in TrendSpider, it is a $9 for a 2-week trial. Okay. I point people towards the annual plan because it does take a long time to learn this software. And I point them towards, if it's within your budget, get the advanced. Why? At $124 a month, it seems like a lot, but you get 52 trainings per year. 52, that's once a week. So figure out 4 times divided by 124. What's that? 27, 28, 29, somewhere in that neighborhood. Name a professional training program that will give you a product expert on a one-on-one Zoom 1 week a year, 1 week per month, or I'm sorry, once per week for an entire year at that price. Plus you get the tool. That's why I say that's the tier that I would get. Now enhanced, because it does take you, enhanced cuts the price in half. And you can get 3 trainings per year. So almost once per quarter. You just check in. Just check in. Now premium, you get 2. Once every, once when you begin and then one later. And it's $52 a month. So again, whichever one suits your budget, go and get. And then I want to point something else out. Okay? One of my favorite features of the Seeking Alpha program is the Catalyst Watch. And it's a weekly email that comes out on Friday at 3 o'clock. It helps you plan each day of the week next week. Which day of the week do you think this is happening? Because President Trump is scheduled to give a speech on AI. Traders expect extra volatility around Bitcoin, Ethereum, Solana, XRP, which is Ripple, into the speech. Which day is that happening? Which day is that happening? Because again, it's in the Catalyst Watch. So if you're a subscriber to Seeking Alpha, boom, you knew this morning that this is going to happen one day of the week, and you can go and buy that stuff. And if you are a Seeking Alpha subscriber, go and look, because there is a free webinar. Okay, a free webinar. Join Seeking Alpha Premium Product Team. They're having office hours for a live office hours session. Get your product questions answered and see demos of key features. Now, the key to this is that you can go over to Linktree. The first link is the TrendSpider, like I told you. The second link is the bundle, which saves you a tremendous amount. But the third link takes you over here. $30 off Seeking Alpha membership. But the key, if you sign up today and you can go to the webinar tomorrow, it's a free 7-day trial. Okay? And so you get a free 7-day trial. You can go and read the Catalyst Watch. Okay? You can schedule your week. And I'm going to go over, there's two specific articles you should go over, okay? The first is the top 2025 stocks because they are killing it. And then the second is your second half stocks. And this is a second half stock, okay? PSIX. I've gone over this one before. They just picked it 1 month ago. And this particular article says it has more room to go, okay? But 1 month ago, this was up 65% in 1 month, and it's still rated as a strong buy. The only thing is the valuation. That just changed to a D because it's run so much. But you can see, you could have bought this one when it was an A. When it was $24. It was $24 back in April when I was saying, hey, this one might be a good one. It's trading at $93 right now. And it's still the number one heavy industrial stock. It's huge. It's huge. Go and read about it. Steve Kress and his team do a fantastic job. Now, I'm going to go over something right now before we go over the biggest winners. I'm going to start something called the Epstein List. And it's not the Epstein List that Donald Trump refuses to release. I am going to release the Epstein List. These are a bunch of stocks that should have never existed because we know that the Epstein List doesn't exist. So what's the first stock that I'm going to put on the Epstein List? It just so happens to be DJT. Why? This company, let's go over and research it, the financials, okay? Revenues. Let's go to annual. Annual revenues, $3.7 million. And you might say, yeah, but they've got a lot of growth ahead of them. No, go and use AI. Ask. Revenues this year are expected to go down by 12%, not grow. So that's the first thing. Epstein List. It's expected to grow. No, it's not. Now the market cap on this is $5.17 billion. The earnings, the revenues, not even earnings because they're not earning any money. This means that it's trading 1,400 times the revenue of this company. That's not price to earnings. That's price to revenue. They have no earnings. And if you go over to Finviz and type in DJT, let's just look at it because right now you've got shares outstanding. They have 220 million shares, but there's only 129 released that are floating. So almost half the company can't even be traded. Okay, it's got a 12% short interest. Again, this is why it is nothing but a trade. Over 1 year, you're down 50%. Year to date, you're down 45%. That's why it's on this list. Don't look at it because this stock is a hoax just like the Epstein List is. Okay, that's what I'm saying. This, again, is the Epstein List. Now, things that are actually moving today. Block. Shares are up XYZ. This is, let's see. Right now, it's up 9.39%. Why? It got added to the S&P. Hood, once again, passed over. Hood was passed over. Now, another big one, Domino's. Domino's, they're soaring because they beat earnings. U.S. same-store sales rose 3.4%. I'm not buying this pizza anymore. I actually like Domino's pizza. Shoot me. But I'm not buying the stock. I don't believe in the stock. That's one thing. I don't love Domino's enough to buy the stock. In the core portfolio, Cleveland Cliffs is up 5%. After the steelmaker posted better than expected Q2, driven by record steel shipments and strength in U.S. focused operations. Remember, this is a Trump company. This is a Trump era tariff. This is going to benefit from those tariffs. So he expects to gain acceleration in H2. Let's go over Cleveland Cliffs. This is in the core portfolio. Let's just look at a stock chart of Cleveland Cliffs. Is this one you want to own? Well, I've pointed this out well before. I said, look at the price of the stock pre-COVID. Because what was U.S. Steel worth? U.S. Steel was worth here, January 2020, right there. It was $8. $8. What's it trading at now? $10. Is it a better company now than it was back then? Yes. And the reason is because you've got tariffs on all of the imported steel. So it's in the core portfolio, not because this is going to make you a ton of money over time, but it is a solid U.S. company. You could trade it. And more than likely, again, I think you're popping back up to 20. Is it a crazy thought that Cleveland Cliffs, again, market cap 4.6 billion, but when you look at their revenues, they're actually making annually 18 million. So again, price to earnings, we can look at that one. Valuation's a little bit stretched. Growth though, they're losing 15% year over year. That's going to start to change. And you can analyze it with AI. Nucor, Steel Dynamics, positives, positioned for a significant turnaround due to aggressive cost cuts. This is one of the most well-run companies you can find out there. Okay, concerns. Face 3 consecutive unprofitable quarters with gross margins lagging behind competitors like Nucor and Steel Dynamics. Again, pick your steel company, but American Steel is going to be coming back. Okay, one that I love that actually was popped on Friday. It was up 15% on Friday. Is Invesco, IVZ. You want to know why I like IVZ? They're the owners of the QQQ Trust. Okay, QQQ is one of the stocks that I hold in a big way. And Invesco is the one that owns it. And why'd they pop 15%? Well, the reason is because QQQ's expense ratio will decrease to 0.18 from 0.20 this year. That estimates a savings to the trust and its shareholders of more than $70 million. And who's the number one holder of this? It's Invesco themselves. So they're going to make more money, not only by just cutting the expense ratio, because they still make a ton of freaking money off this. But they will actually make money because the stocks are going to be worth more because the expense ratio goes down. So again, the market figures all this out. But IVZ, is it a buy? Well, it's a hold. Why? It's growth. It's only growing revenue by 6% a year. That's not great. Its valuation, it's a B. It's not super expensive. Wall Street thinks that it's a $17 stock. So while you're trading at 20, just understand, Wall Street thinks it's a $17 stock. So if you're in this one and you traded it, I would probably be trimming, since this is the 52-week high and probably all-time high. Now, you guys know I use Perplexity a lot, and I thought this article was great. An overview of Perplexity. It goes over the business portion of Perplexity. I found it insightful. I think if you use Perplexity and you have Seeking Alpha, you should absolutely read this article. And what stocks? Like you always say, well, you give us all of the stocks from Seeking Alpha. Well, here's CNBC. Top Wall Street analysts are confident in these three stocks. I own them. Okay, first is Uber. Why? I think Uber's perfectly fine. They've got a solid business and they've got a proven business model. And if you go to a city and you're using Uber, buy Uber stock. It's a good one. If you use Uber Eats, go and get Uber. Alphabet, same kind of thing. I think Google is fine, but they report earnings on Tuesday, I think, tomorrow. The street will be focused on search revenue. That's it. Okay, JP Morgan affirmed they increased their price target from 195 to 200. And then the final one, Meta. You can't do any better than Meta. Again, I own all of these. I own them all. Now, want to know a YOLO play that I think actually sounds pretty good after reading this? It's Oscar. Okay, and Oscar last week on his podcast, or I'm sorry, it's Shy last week on his podcast, not Oscar. I don't know who the hell Oscar is. But Oscar, they pointed out that they have $9 per share of cash on hand. That means with Oscar, when you're paying $13, you're not paying $13 for this stock. You are literally paying $4 for the stock because you've got $13 on hand of cash. Or I'm sorry, $9 on hand of cash. So the valuation is not stretched. 5 times forward earnings. But when you add in all of the other stuff, again, it's fairly cheap. The growth, 54% revenue year over year. The profitability, pretty damn good. 20% gross profit margins. Return on total assets, 2%. Again, if you want to know why it's a B, go up and analyze with AI. And if we go for profitability with high asset turnover ratio of 1.96, far above the sector of 0.22. However, its EBITDA margin of 2% is significantly lower than the sector at 22%, indicating room for improvement in operations. And again, all of this is done just in seeking out. It's so simple. Now, when you look at this stock and you say, well, year to date, it's down 0.15, its short interest is 13%, which means any good news could be a catalyst to this stock. And that $13 does seem to be support. Why? Well, it's an old resistance back in January of last year. Okay? It was resistance for a little bit, a couple of days, and then it provided support on this pullback back in March. And then you see it go up to 23, and you see it pull back to about 15. Okay? See it go up to 23. Again, that's a double top. Then you see it pull back to 13 back in November, went back up to 18, and again, back to 13 in December. And then it just a short little hop. And now we're getting similar to last year. Back here in July, you popped up and its high was 22.78, almost at that 23. And now you're at the 13 and you're starting to turn. How would I trade this? Well, very simple. The 4-hour algorithm. You want to know why? It makes you 75% versus 63% buy and hold. So I'm going to wait until the 4-hour algorithm gives me an indication to buy. And then on August 5th, I'm going to hope that the earnings are good. What have been the earnings reaction the last couple of times? Well, this one back in November last year, if we look at August of last year, it ran up to 23 all the way from 17. It was a good quarter. This quarter wasn't a good quarter. It crashed down to 15, but you got a chance to get back, back your money. So again, I think this range between 13 and 23, probably a fairly good range right there. And you can see right here that $13 provides a pretty good support. But I am waiting for, this could be a YOLO play. I'm waiting for the 4-hour algorithm. Now you say, well, I don't want a YOLO play. I want some solid earnings. Well, here's your expected revenue growth in the next 5 years. So if you want growth stocks, Palantir, up 300%. Are you buying Palantir? Because for me, 154 has always been, boy, wouldn't you have liked to get in at that 139 right there? 4-hour algorithm got you in after a 47% gain in just what? Let's look at this. We're going to highlight this one and we're going to bring this down here. After just 82 days, nice 50%, 47, 50% gain. Again, a great stock. But am I buying it? No. Nvidia, are you buying it at all-time highs? Again, you want something that is an opportunity, short-term, long-term. This is a great long-term play, even at all-time highs at 172. This one made you 65% just over the last 84 days since the 4-hour algorithm got you in. It's a great one. Shopify, their revenues are expected to grow by 156%. This is one algorithm just got you in at 114. You're at 127. Again, there are opportunities out there. Even Apple growing their revenue at 28%. This is a great buy? Well, they've got earnings coming up. Buying Apple under $200, great buy. Fantastic buy. Again, there are opportunities out there. All right, do you want growth? Do you want a YOLO play? What do you want? One of them that I have missed out on is Robinhood. Every year since going public, 2022, they lost 54%. This is the share price, the stock performance. This is all you should care about. Not revenue, not earnings per share, not cash on hand. The only thing you personally care about is the stock price. And so in 2022, when they lost 54%, did you throw it out? Maybe. But then in 2023, you got all your money back. And then in 2024, you almost doubled your money. And again, this year so far, you've almost doubled your money. Does it make sense to buy now? Well, maybe the 4-hour algorithm makes sense because over the last 100 days, this is up 200% in the 4-hour algorithm. You win 50% of the time. This is why I should tell you that if you haven't gotten into Robinhood, the 4-hour algorithm can help because it takes emotion out of this and it says, I win 50% of the time. Okay, over 24 months, there are 20 positions. 10 are winners, 10 are losers. But your average win is 38%. Your average loss is 4.69. So are you winning 100% of the time? No, but this can provide you entries into a great growth stock. And if you want to see, does the quant say buy? No, the quant says hold. But it's been a hold ever since 92. Then at 76, it was a strong buy. It pops in and out of these strong buys. And you can see that green and that yellow. Now, what does Wall Street think that it's worth? They think that it's worth $98, which is 10% downside. I would say anything under 100 is a good buy on Robinhood. But how am I trading it? I'm trading it when the 4-hour algorithm tells me to get in. Now, I don't own this. I do have alerts set up for this. And you can see those alerts came up at $100. I didn't get in under 100. I'm waiting for it. It's at 109 right now. Am I going to get the chance? Maybe. Maybe not. But those 3-4 years, I want part of this. I like this stock. I like the story. I like it. And maybe you want to trade leaders now. Well, right now, the hot theme, uranium, Oklo, CCJ, Cameco, UEC, U. All of these are super hot stock charts. Do they make sense? Maybe. Probably not, valuation-wise. But again, that's why you use charts and fundamentals. Now, Cleveland Cliffs reported. We just went over Cleveland Cliffs. It's in the core portfolio. Maybe the chart looks for a rebound. 4-hour algorithm got you in here at $7.46. Right now, you're trading at $9.97. Let's just say 10. Okay, let's just say 10. Let's just see. We got to move this back here. 24 days, 37%. 37%. It does better than buy and hold because if you bought and held for 2 years, you've lost 43%. Using the 4-hour algorithm, you've actually made 3%. So it's far better. Now, one other one that killed it this morning and is up almost, I think, 7-8%, somewhere in that neighborhood, is Verizon. Now, Verizon doesn't trade well on the 4-hour algorithm, but you don't buy Verizon to trade it. You buy Verizon because it's got a great dividend, okay? And what's better, AT&T or Verizon? Because AT&T has earnings coming up. And if you look at Verizon, just go over to Seeking Alpha. Look at Verizon. And let's just look at the yield, 6.64%. So in the pre-market, it's up 2%. Year to date, you're up 2%, but you're getting a 6.64% dividend yield because it's trading so cheap. And it's on the bottom end of its 52-week range. Now, Wall Street says that this is worth $48. That's 18% upside. Want to know why? The profitability is unbelievable. Its valuation, fantastic. I mean, it's super, super cheap. But the growth sucks. The momentum sucks. The revisions to earnings per share suck. So maybe it's not a good business, but they did kill it. They absolutely killed it. So again, what's better, AT&T or Verizon? Again, Seeking Alpha gives you this. Now let's talk about some of the earnings that are coming up. One that's coming up, Coke. This should be on your list. It's reporting tomorrow before the bell. You want to know why? Because Pepsi killed it. Now, I've said when this gets down to 60, you buy. But when it's up at 70, you sell. Am I buying at $70.40? No. This is one that you don't trade. You just don't trade this. This is one that you buy and hold. It's a quality stock. Are you going to lose a ton of money on this one? Probably not. I mean, this one going all the way back here to just pre-COVID, it's a $60 stock and it's grown to 70. Is that great? Nah. You do this for the compounding of the dividend. It's part of my portfolio. I will tell you, it is a low 5-figure position in my portfolio because I constantly sell at the $70 and I wait for the 60s to start buying. And that's just been my strategy for the past 3-4 years. That's it. Do I get out of it at the $70? No. I just sell anything that was purchased in the 60s that's a long-term holding, and I sell it. But the dividend yield is 2.92%, so it's not bad. It's just not something, you chart this against the S&P, and you go out 3 years, and we're going to select the metrics because of the dividend. I want to do total return, not just price return. Okay? Total return on this doesn't beat the S&P. It's only 23%. Okay? If we add Verizon in here, Verizon over 3 years, because that has a huge dividend. Okay, does Verizon beat the S&P? No. It actually does worse than Coke. But you want to know a stock that really does well with a dividend? It's MPLX. It's energy. Look at MPLX versus the S&P. The S&P is up 64% over 3 years. MPLX doubles it, 117%, almost doubles it. So again, pick your stocks, but understand how they perform. Coke is one that I think will pop. But am I buying more of it? No. I've got a strategy for it. Now, again, this comes from the me setting up from the Catalyst Watch. Wednesday, we've got GE Vernova, GEV. They report on Wednesday. What am I hoping for? I'm hoping for a pullback. This is a new stock that's only been out 15 months. In those 15 months, if you bought the first day it came out, you are up an amazing 398%. If you, like me, just don't like buying a stock that's split off from its parent company, which is GE, or IPOs because you want to see what it is, you've missed it. I could have traded this one and over the last 15 months at least made 99%, but I didn't. And this one got you in, and I had it identified as a stock I wanted to buy back here in April. I didn't pull the trigger. It's up 92% in 100 days. That's an amazing one. I'm hoping for a pullback. If you get a pullback to 400s, It's probably time to get in. Another one that reports on Tuesday is Tesla. Elon made a plea over the week. He is now sleeping on the factory floor again. Again. That's bullish. It's not bullish when he starts doing all his antics with politics, and that may come up again. It's just something you have to deal with. How do I trade this? I trade it in the 4-hour algorithm. I don't hold an enormous position in this. I own it a lot of XLY. Why? Because when I look at XLY, I don't want to deal with the politics stuff. And XLY, when I look at the holdings, its top two positions, which make up 38, almost 40% of the entire ETF, Amazon and Tesla, both companies that I like and I own. But Tesla's reporting. What can we expect? Well, Dan Niles puts it out here. I have no strong opinion on the near-term reaction. The stock price is loosely tied to earnings results over the near term. It's more about the optimism or lack thereof of future initiatives like robotaxis, autonomous robots, and potential government contracts as we saw following the presidential election. Again, that's where Tesla's stock is. That's why I like trading it in the 4-hour algorithm. I have small positions in my Webull account where I trade in and out based on the 4-hour algorithm. Look at the performance. Down here, 62%. It's 26 positions over 24 months. If you just bought and held, you made 22%. I don't like to buy and hold this one. Although, I will tell you, since 2018, I learned my lesson. Buying and holding has been far better. Now, another one that is interesting. Again, it's a top stock from CNBC that I just went over, but Google. Personally, I think this is going to focus on search revenue. I think as they see search revenue coming down, I think the street starts to pull this one back. Dan Niles has a different take. He's more optimistic. He believes Q2 results and guidance will be solid. The PE is only 19 times. Full year 2025 with the S&P at 24. Again, the S&P is at 24 times earnings, but Google's trading at 19. The stock is down 2% year to date. Google probably has the most advantage longer term in AI. Again, how will investors react to paid clicks? This might go negative year over year in Q2. As a reminder, Q1, the first quarter, paid clicks were up 8%. It was then up only 5% in Q1 2024. Clear that usage of AI chatbots continues to go into it. Go and read Dan's analysis of this. It's great. But I remain bullish on Google. Am I selling Google? No. But as it gets up there towards 200, look at the couple of times it's gotten up there. Back here in July 2024, trading at about 193 right there. Then it broke through here in January of this year, pulled back. If we're going to get back on this trend line, it's going to be back around 213. And so at 193, I'm probably going to continue to trim this because I think the street is going to focus on just search revenue. Now, one other one that reports on Wednesday, IBM. Look at this stock. Algorithm has you out. Okay, after a 7% gain, it's slow and steady. But look at that gain since 2023. And this is IBM, okay? October lows of 2023. In just 1 year, you've doubled your money in a blue chip tech stock. And yes, that includes the 2024 pull down. That includes Liberation Day. Slow and steady. Is it extended? Absolutely, it's extended. But is it a good buy? Well, let's go and look. I mean, it's a hold from the quant standpoint. Its valuation extended. When we talked about Google being at 19 PE, forward PE, this one's at 26. Wall Street thinks IBM is 273. It's trading at 285. Now, speaking of tech titans, what happens on Thursday? Intel. Is this one a buy? This one has popped a little over the last few weeks. June 4th, you got a buy-in. Now, if you are into Intel, let me just make this plea to you. If you are in Intel and you don't have the 4-hour algorithm, you better damn well have a good strategy. Because over the last 2 years, you are down 30%, 29.5 to be exact, if you just bought and held. But if you traded the 4-hour algorithm, you are up 23%, 29 positions in 24 months, including this one. That was just at the beginning of June. And up over 46 days, 15%. They report on Thursday. Do they have a shot like all the other chip companies have? New management. Maybe we get some new talk here. Is Intel a good buy? Well, let's look at it. Wall Street says it's worth $21. You're trading at $23 right now. Okay? It's a hold from the quant. Why? Valuation sucks, growth sucks, and all the revisions are down. But its profitability is fantastic. Okay, CapEx percent, 43%. Now, another one that reports on Thursday is Deckers. This was a huge, huge gainer that has just crashed. Just got to buy in the 4-hour algorithm. Doesn't trade well. But is this one going to start to turn around? Look at that fall. Look at the MACD super low on the weekly with the RSI at 36, and you're trading around the 200 week. When's the last time you got this discount? 2022 lows, and it went for a run. This was trading at $37. It ran all the way to $225. That, just over those few years, that is a 450% gain. If you timed it. Maybe you didn't time it. But again, is this one due for a big one? Deckers, again, is it's a strong sell, performing badly. Why? They've decelerated momentum and declining growth and compared to other consumer discretionary stocks to the point that it gets a sell rating from the quant. And this is in footwear. What's the number one footwear name right now? It's Rocky Brands, RCKY. Okay, this one, year to date, it's only up 0.6%. 1 month, it's up 7%. It's in the middle of its 52-week range. Now, you may like On, you may not like Nike, you may like Wolverine, you may like Bird, you may like Birkenstock, you may like Crocs, you may even like Skechers, which Skechers I thought was a pretty good play here. But again, take your pick. One that is a big gainer year to date that reports on Thursday is Newmont. This is a gold miner. I own this one. It's now a strong buy in the quant. It wasn't when I bought it, and I sold it. I sold it at 50. It's at 60 now. I sold it at 50. Now, it was a strong buy this whole time. Even at 50, when I sold it, it was a strong buy. I didn't listen. I was like, gold, it's probably had its run. Well, the valuation of this one's still cheap. The growth isn't that great, but its revenue year over year is up 49%. Profitability, unbelievable. Momentum, it's one of the leading S&P ones. And they report on Thursday. So even with the gold, the old tech titans like IBM and Intel, even with Deckers and the shoes, which ones are you picking? Are the Mag 7 dead? And this is an article, Tech Titans drift apart as AI winners emerge from the pack. And this goes over Apple, goes over the tech crowd. This article goes over everything. I will tell you, I'm in the camp that big continues to get bigger. And with Apple in particular, it's temporary. They're up 1.25%. My portfolio is going to be rocking today. Now, what else rocks? Well, it's crypto. Sequans buys $150 million worth of Bitcoin. This was up 15% this morning just on that news. Just on that news. It was up 18%. If you just look at one day, it has crashed. Let's just go and look at the chart, and I'll pull up SQNS is the symbol sequence. Let's look at a 5-minute, and we will look at after hours. And you can see just with the release of that, the damn thing ran up to, let's see, $3.70. It's trading at $2.91 right now. So it's crashed. It's hype. It's hype. And this particular article might have caught your attention. A bleak outlook beyond the Bitcoin hype. That's all this is. So if you're buying into some type of run, understand what you're buying into. That's what this is. Meanwhile, all the other banks, big banks execs lay out stablecoin ambitions. This is going to be the keyword for the second half of this year. It's stablecoins. Even JP Morgan with Jamie Dimon brought up stablecoins. They will engage with stablecoins to understand it, to be good at it. So again, all the banks are doing this, and that is going to be a catalyst for banks. Why? Because the largest stablecoin out there is Circle. Okay? And Circle, are you buying at 225? 4-hour algorithm just got in. I would not say that you get in. But this one, year to date, is up 238% since it debuted. It does not have good fundamentals at this price. Not one bit. It's not covered by the quant. But this is a good business to be in. Again, it's crazy the amount that is up. Over 1 month, it's down 13%. 5 days, it's up 10%. You will see these things swing. My particular winnings on this one, I own Wells Fargo, I own Bank of America, and I own Goldman Sachs. All of them will have stable coins because they're allowed to now. We know that that's going to become legal. And if you want to know what other earnings are out there this week, here is Earnings Hub. It's my favorite. I don't listen to earnings whispers. Earnings Hub is where I'm at. It's just a better layout. It's just an easier way to look at things. I like it. So let me know which ones you're interested in this week, because I'll look at them. I don't particularly, I like Tesla. I like Google. I like IBM. Stuff that's already run. One that is up crazy is QuantumScape. And I went over this one last week. Is this one that you're interested in? Well, 4-hour algorithm has a great run on this. Even though it's down today, the 4-hour algorithm is still up 128% in just 25 days on QuantumScape. And they report on Wednesday. And you can see they're no revenue. They're expected to lose 19 cents per share. That's better than what they reported last time. So expect some craziness in that one. Now, let's just talk about the 4-hour algorithm, because I do this in the newsletter every day. You just run to the end of the newsletter, okay? If there's nothing that you want to see in the newsletter, you don't want to see the stories that I do, you don't want to see anything, just go to the end. This was Friday, so I don't do scans on Fridays, just because I don't think that you should be buying on Fridays, to be honest with you, unless it's a long-term buy. And the 4-hour algorithm is typical, but here, scans bullish in the 4-hour algorithm. So let's look at today's. Well, Bank of America, after their earnings, are they going to fill this gap up here to 47.40? You're trading at 47.40 right now. I'm sorry, the gap goes up to 48.45. You're up slightly in pre-market. I think it's a $50 stock. I'm going to sell it $50. Did it get to $50? No, it got to $49.30. I have a trigger at 50. Another one that you may want to think about buying, which is lagging the S&P since Buffett announced that he's leaving. Look at that gap down. Okay, that gap down to 521 from 536. And all of a sudden, you have a win here, a buy at 473. Is it a good one? Maybe. Again, this is lagging. In the 4-hour algorithm, I've said this before, Disney, if it can hold that 120, that now becomes support. And if this one's support, where's it going to? Well, I would argue that 153. Why that 153? Well, take a look at it. Prior to the pandemic, okay, in 2020, the stock was trading around 153. It's still expensive. FYI, it's still expensive. But you can clearly see that 120, a resistance right here, a resistance right here in March 2024, a resistance in December 2024, and now a resistance here. If it can hold this for a couple of weeks, that now will turn to support. So I like Disney. And in the core portfolio, Pan W. Anything under $200, I think you take off above $200 on this one. It is cybersecurity. And another one, a spider sector that just got a buy, consumer staples, XLP. Is this a good one in the 4-hour algorithm? Well, kind of makes, 8% versus 10% if you buy and hold. So if you're into consumer staples, go and research the ETF and go and look at it and say, yeah, I like this because of its holdings. There are a lot more. There are a ton in the watch list on this. Okay. And there's even some leveraged ETFs, BTCZ, which, by the way, be careful of leveraged ETFs. They are designed as decaying assets. So they will rarely make you more money than buy and hold in the 4-hour algorithm. And even buy and hold tends to lose you a lot. Okay. But this is 2 times Bitcoin. Is that bullish? Well, maybe. MSFD. This is the bear on Microsoft, which is at all-time highs at 511. Is it time to start buying the bearish? Because we've got a gap here between 1420 and 1325, which would be a great move if you can get up there. But again, that's a bear. MicroStrategy, which has taken off. This is a 2 times leveraged inverse on MicroStrategy, MSTZ. Okay, MSTU is the one that's up. MSTZ, is it time to buy this one? Because we're up at those highs. And NVIDIA gets a short one. And TECL, which is the tech sector. This is a bull. And it's had you in since 41, April 22nd. Since 41. I will say that again. The 4-hour algorithm got you in here at 41. In 87 days, you are up 144%. Again, the 4-hour algorithm. Want the 4-hour algorithm? We'll go over to Linktree, click on the top link, and you can get it on sale. And if you want this, again, if you want this webinar, the free webinar on how to use Seeking Alpha, go and get the free 7-day trial of Seeking Alpha. I would urge you to get the bundle, because what does the bundle get you? It gets you alpha picks. Just a fantastic portfolio that beats the S&P. It's 1 pick on the 1st, 1 pick on the 15th, and they tell you when to sell. That's the key. And it gives you analysis. It's not just this one and done kind of, hey, buy here, sell here. They give you a full analysis and a full rules-based portfolio so you can learn how to manage a portfolio. It's good. It's fantastic. So if you have any questions, hit me up. Not only are all the sales here on Linktree, but my email address is up here on the right, or just reply to one of these emails that you get from the newsletter. That's it. I'll be back tomorrow. We may have more on the Epstein list. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.